what's the biggest change under the ICE banner? And there's an interesting question on management integration.
I would say that the biggest change under the ICE banner is what brought me to Liffe, London Financial Futures Exchange, back in 2001. The thing that I was most impressed with in 2001 is that you had technologists and business people solving problems together. Technology was the solution to the biggest issue that faced the Liffe markets in 2001. And that was, how do we protect our franchise? How do we move our markets electronic? Today, that same mantra, it lives and breathes everything that we do as a management team. How do we take our technology and solve problems, not just that we may have, but that exist in the marketplace? Most recently, how do we modernize the US mortgage industry? How do we continue to evolve market structure in my business, the very fragmented fixed income business? That is 100% a technology and a data solution to those problems.
You allied it into trading bonds by taking this data set, adding tools, the tools begat tools, and then suddenly, when I say suddenly, you have this incredible growth in trading. And I mean, portfolio trading, you'll remember the numbers better than me, but the two numbers that spring to me are what? Q4 2020, correct me if I'm wrong, you traded 1.9 billion, which is a pretty hefty number of bonds in anybody's book. And then Q1 2021, you traded 4.2 billion. I mean, you've been kind of doubling those numbers over the course of the last year, quarter by quarter.
So portfolio trading now represents 5% of all TRACE volumes. That is something that a year ago was probably about 1% or 2% of TRACE volumes. Two reasons why portfolio trading has become more popular in the market. One is as a result of the growth in ETFs and firms looking to manage exposure to those ETFs and the baskets that underpin those ETFs. Portfolio trading is a great way to manage the portfolio and execute across a variety of bonds as opposed to just a single issue. The second is the general liquidity and the ability for dealers to make markets in individual issues. Blocks still happen in individual issues, but a dealer would be able to give you a price much smaller notional on a single issue, but across a variety of issues to give you an equivalent exposure. So from a balance sheet perspective, it's actually much better from a dealer to offer you that liquidity through a portfolio trade. So those are just two examples of why it has become very popular. And as you mentioned, we've seen really, really good growth. We did have portfolio trading prior to Q4, but Q4 is when we started to see the uptick in the community. We a couple of asset managers come on, just under 2 billion. We had a couple more asset managers join in Q1, and it was over 4.2 billion. And Q2 is already off to a strong start.
Is there actually any limit to what we're potentially looking at in terms of the usage of data?
There's not. I mean, you think about how the world has evolved. I think frequently, because I'm in the business, of how the world has evolved since I first started in the industry. When I first started in the industry, I'm looking for my iPhone right now to hold it up. That didn't exist. I think I had a flip phone when I first started in the industry. This emits a lot of data. My browsing, what I look at every day, what I order on apps, where I'm located, what the weather's doing. So it is a bit of a virtuous circle in that humans are continuing through their interaction with electronic mechanisms, are continuing to output more and more data. Some of that is completely not useful, but some of that is useful for financial markets and for managing risk in financial markets. So I think that the data world 2 years from now, 3 years from now, 5 years from now is just going to continue to evolve at a pace that we've not seen yet.
What are the particular hurdles you see in the relatively near term about trying to manage that sort of data lake?
I'd say one of the hurdles that we have is just continuing to keep up with the demand. Quite honestly, we have a ton of opportunities. My whiteboard, you can probably see behind me, is filled with stuff. It's really hard for us to figure out which one of those is going to be a game changer type product versus is just going to be interesting, but not exactly land the plane where we thought it would. And that just comes back to we need to continue to spend time with our customers. We don't like to develop things in vacuums. The ESG area is something that continues to interest me. That area is going to be an area that I think is going to continue to grow in importance. I don't know if 5 years from now we're talking about ESG as a thing, or if those risk factors just wind up getting embedded automatically as just part of normal disclosures. If that just becomes a standard disclosure framework that companies in particular need to do.
Do you see this marketplace going forward in a world where you've now had 10, 20 years of thoroughly exponential growth? How does it look to you in the hot seat?
I think that for the next 5 years, the next 10 years, you're just going to continue to see technology and data playing a key role in automating inefficiencies in the world and adding transparency that we never knew we were missing.